Hello, everyone. Welcome back to the Options Professor podcast. This is Damien, and today is Friday, August 14th. Now, quite frankly, this was probably the worst week I've had trading all of this year. And maybe only 3 or 4 losing weeks, but this was a losing week that kind of hurt. It was, again, my biggest losing week. So let's take a look at the trades that I closed out this week, and then maybe the trades that I put on going into next week so we can be ready. Maybe there are things that we could have learned about how I traded this week. But just looking at the SPY, we were looking at an all-time high here at 339.08. So 339.08 right before the COVID issues started to happen. And now we almost hit that again this week. And so that's what I was watching. I didn't think we would go straight up for the entire week. And if you look at just this week, and here's this week, we opened up around 334, opened up the week around 334, and then just kind of went higher and higher and higher, hitting a high of 338.28 for the week. And we just stayed up there. And so what's going to happen for the rest of this year? Will this keep going up and just hit all-time highs? I don't know. Or can it be a double top and then come back down to maybe the 300 level? I'm not quite sure, but I'm hedging some of the downside just in case. But at this point, like I said, I don't really call for any kind of turnaround. All I'm going to do is ride the momentum one way or another. And if it keeps going up, I'll keep riding that momentum. If it comes down, then I'll ride the momentum coming down. But even though this was an up week, I had some trades that actually went against me, and maybe my own fault. So let's take a look at Home Depot. So Home Depot, I've been in this for quite a while, maybe almost 3 weeks, I think 2 weeks, 3 weeks. And I saw it in this channel right here, which is at the bottom side, 255, and to the upside, 275. And it was trading within this range up until mid this week. And then it broke through the 275 and just took off up to 282. And that's where I kind of got into trouble. So, how would I have played this any differently? I think I could have taken a $300 profit, a small profit here on, maybe late last Friday or even Monday. Going into Monday, I could have gotten a $300 profit, and I didn't take it. And what ended up happening was it blew through the top side because of COVID. Really, it was just way too strong. Home improvement stocks have just been moving up. So when it made that move up, I had no choice but to hang on to it and see if it can recover back to this 275 level. So I did recover some of a little bit, but not a whole lot. So it wasn't a full 100% loss, maybe closer to like 85 or 90% loss on total risk. But really, this trade went against me as soon as it crossed over the 275. It did come down back to 275 again Wednesday, and I still didn't close it. So really, that was my fault for just hanging on to something too long. Who knows? Could have, would have, should have. But at this point, learn from it, move on, and maybe watch this upper level on the band. So I think the Iron Condor would have been fine, but it did the run up into earnings, which normally I play that. This time I didn't, and it came back to bite me. Another stock that I actually got out a little bit earlier than I wanted to because I was worried that it wasn't going to hold levels, BYND, Beyond Meat. And I had this on for 2 weeks to hold the 130 level. And this 130 level was really at the 50 moving average. So as the 50 moving average was moving up, I was watching this for it to hold 130. Unfortunately, when Monday happened, it came down. And then Tuesday, it opened up and went back up to 130. But as Tuesday started to sell off, towards the close of the day, I closed out my BYND spreads, and I managed to really save myself from a full loss, because if you look at Friday, today it closed around 125, and then going into next week, with 1 week left, I didn't feel good about this position. So potentially could be a full 100% loss had I held it. But I did get out when it was around 128, so just $2 below the 130 mark, and I managed to save myself a little bit of the premium here. I think the loss here that I took was about 30%. So I took a 30% loss, and that's obviously a good example of how you manage your risk. So when we get into these credit spreads, you don't have to take 100% loss. You can manage them and take the 30% loss. And I'm okay with that, because as you've seen in the previous weeks, I've made, that 30 to 50% profit target, and it only takes me one trade to make this back up. Now, if I'd lost the full 100%, I have to win 3 or 4 times as many of these 30 to 50% winners in order to cover the 100% losers. So I feel like this was, for me, a good risk management play. Even though the level broke, I managed to limit my loss on BYND. And, the level broke. I can't do anything about that. Just move on to the next trade. We're not going to win them all, but it's all about how do we survive these so we can have enough capital to keep going into the next trade. And I had one more losing trade, and that was ROKU. And so this week I felt like I was 0 for 3. In ROKU, I was looking at it to hold the 150. The 150 level was where I wanted to hold. I was watching this 200 moving average, and I wanted it to hold the 200 moving average. Monday, it held it. It touched it. It held it. It bounced back over. And then Tuesday, it did bounce below. I still held it through the first one. It recovered over the 200. But then the second time it came through, I decided to get out of it. Because the stock was already weak, and with the QQQ dropping Tuesday afternoon, I didn't want this to get away from me. So I ended up closing ROKU for about a 45% loss. Again, it was in order for me to manage this trade and not get into 100% loser, I wanted to get out of it. I did have a couple of students wait until the next day and got out when it was back over 150, and they broke even or had a very small loss. But as you can see, that was good timing. Had they held on longer, they would have been into even a bigger loser. And even though it kept bumping over 150, it just didn't look like it was going to be able to hold that 150 level. So 3 stocks that just did not hold the levels I had identified, and that happens. So I'm glad it all happened this week, so I can get them off my plate and move on to some next trades. So overall, took a 90% loser, a 30% loser, and a 45% loser. All of those are manageable, and that's why we do these spreads, because it manages our risk to reward ratio, and I can manage my risk and not risk my entire portfolio doing these. Okay, so tough week, but let's see what I did enter going into next week. So I've got 3 new trades that I entered earlier this week. LULU was one of them, and LULU, I ended up selling the 335 puts. So I got 335, 330 put spread, and I'm carrying this into next week. So this was a 2-week expiration going to 8/21. And it did, when I made the trade Monday, it actually came back down to the 335 and bounced off it. So I did see it bounce off the 335 last week. Last week, Thursday, bounced off the 335. And then again, looks like Monday or Tuesday, early Tuesday, it bounced off the 335. And then I managed to get in midday Tuesday, and as it came down, it bounced off the 335 again and took off the 355, 354.59 exactly. So I was looking at potentially getting out on this bounce, but it still looks good. Going one more week, I'm looking at this to be a 47% winner. Okay, and it still looks good. Another trade that I entered this week was Match. And match I did for expiration of today. It was only a 3-day hold, and the 3 days I just needed it to stay above 115, and the 115 level held today. So it expired worthless, and I took a profit here of about 31%. So this alone covered my BYND loss. This trade here recovered that for me. But it was nice to just have something to hold for 3 days and take a 31% profit. I may look at revisiting this one next week or the following week. So it still looks good above 115. And then the last one I still have going on, I put this on today, is ACN. So Accenture. And Accenture looks to be holding this this line, even though it came down below the 50 moving average. I sold the 227.50 and bought the 225 below for protection. So it's a 250 wide spread. I just need Accenture to stay above 227.50 for 1 week, and I'll collect full profit here. It's about a 25% profit target. Okay, and it looks good. I think that 227 is right at the bottom of the Keltner channel. It's also right around the 50 moving average. So I'll keep an eye on this, and I even like it to maybe come down to 329 and then bounce right back up to the 332 level. And that point, I might be able to get into a debit spread. I did do one debit trade this week. And that was in CVS. So CVS today, I looked at this and thought, okay, it had some momentum. As it moved over the 50 moving average, it had momentum going up here to potentially to 66. And so what I ended up doing was buying the 64 call. So I bought the 64 call, which is right around the 200 moving average. And then I sold the 66. So I've got a $2 wide debit spread. Bought that for 115, and I'm hoping to sell this closer to $2. So maybe $1.80, $1.90 going into next week. So it would, as long as CVS keeps moving up towards 66 and closes around 66 or above 66, this will give me a 70% winner next week. All right, so those are my trades going into next week. I think as a trader, you're always prepared for losses and weeks like this. Good news is I don't have them very often. The past 4 months, I've only had 3 losers, and this obviously is my biggest losing week. So I'll take those any day. Moving on to next week, we've got to have really short memories. Forget about it, move on, and not worry about it. And I'll probably even forget these levels when we move into the next couple weeks. But next week looks good, setting those up. I'm still watching the market, and I'll be back Sunday night for my weekly watch list.